Hey, what's going on, Wealthy Legacy Journeyers? Welcome back to the Wealthy Legacy Journey. Super excited to have you guys here today talking with me. And we're going to talk about building bottlenecks on purpose. In fact, that's the title of today's episode. How we're doing that inside of real estate, what we got going on, and all that kind of great stuff. So, couple of quick updates. In real estate, we currently have about 15 agents. I just did a count today. Oh, what was it? We were at 12. We're currently at 12 agents. We have a couple more agents trickling in, which is very exciting. We've had so many things that we're learning along the way, how to join the boards, how to make sure that we have the correct, office structure under the boards in order to be able to view all the listings. We had to actually join another board of realtors, which was interesting. So we're part of Arbor now, and we're a part of Metrotex, and those were kind of the ones we already had planned. Then we jumped to part of GDW Car for one of the agents that was joining. Lots and lots of learning curves. And it's really just been learning while we're doing, and not getting hung up on trying to have the completely figured out perfect system before we execute it and move forward. It's really been a lot of learn as we go type stuff. It's been really, really fun though, just to be able to learn. I'm not going to lie, it's been a little bit tiring. There's been a lot of things to take care of, but it's been a great learning opportunity. We've had lots of moments to kind of have high fives and successes, as well as lots of moments of going, oh crap, like, this is not right. We have to fix this, like trying to fix things that are broken right now because this needs to go live right now, or this needs to happen right now. And so we've just been figuring out our processes and our softwares and our systems. But we've also come a really long way, executing and learning as we grow, right? So, it's been really big to have such a big onboarding wave, and we learned a lot through it. I'm very excited to get to switch gears and kind of slow down on that marketing side, really be able to focus back on the process and making sure that we're able to do great at the purchase. The sell, our purchase team is great, our sell team is great, our leads team is great, and setting those different goals. So I actually was able to set a goal for the purchase team that we'd be able to have 10 purchases closed in May. I would love to see 20 in June and 30 in July as we really pick up the pace. With that being said, there's also Ambition Group's purchases are still happening right now, and they're pacing about 20-25 a month. So we're going to be able to start building up, our volume to be able to meet that. I would love to see us be able to hit those numbers and be, at the kind of the same level as they're purchasing. With that said, we also have to build the sell team to be able to be efficient enough to unload those deals back off of the books in a timely manner, so we're able to stay profitable on all of that deal flow. With that said, too, one of the other big focuses that's coming down the pipeline that we're actually working on right now in the background is getting all of our tech set up in order to do a lot more advertising, like Facebook ads on listings that we have put together in order to bring more leads in the door. So one of the things I just let the team know as far as a goal is I would love by the end of May to see that every new listing that goes out, we are getting at least 40 buyer leads in the door with a 5% conversion rate, where that's essentially 1 to 2 buyer leads, 1 to 2 seller leads. So maybe, in basically a 5% conversion rate as far as transaction goes. So where 40 people come in and you might end up with 2 transactions. So what would be great is, you might have a buyer on that specific property, and then maybe you have a buyer on another property, and one of those 2 buyers also has a house that they need to sell, and we can become the listing agent for that as well, and kind of bundling those transactions together. But as I transition away from recruiting campaigns and I'm back to we're going to awareness campaigns, and I'm turning my personal focus back to the process. I'm now thinking about, okay, we went from basically 2.5 agents on the team, give or take, to now about 15 agents. That's a lot of agents that need a lot of volume. Now we have a pretty big backlog that has to be taken care of, so that's going to be able to feed them for a little bit. But in the long term, how can we make sure that everybody is getting fed? And so that's really where it comes into. We've got to build up our purchasing. We've got to build up our leads. And that can't be in 2 months from now. That can't be in a month from now. I've got to start working on building out those processes now. And that really just comes down to, like, I just hit this huge wave of growth, and it's so tempting to go, man, I'm tired. That was a big move. That was a big push. I want to just kind of step off the gas and slow down a little bit. But the problem is that I've now fed have set all these really high expectations and standards, and now I have to build the system in order to be able to produce. So I don't get a chance to slow down. In fact, I got to keep it up in high gear to build out all these different processes. And it's just really that process that seems to happen whenever you start up a new company. From what I've noticed now, I'm starting to really see this pattern of it just seems like it takes 6 to 12 months of grind. And at the end of that 6 to 12 months, you can really see, is this going to work or is it not going to work? I was telling Libby the other day, praise the Lord, I do see this one as one that have the ideas that I'm doing that's going to work. I just have to make sure that instead of when I get tired wanting to quit, I have to scale, I have to grow, I've got to hire, I've got to keep going. Like that moment, I was actually just talking to somebody the other day, and he was like, yeah, we're about to send out this whole mailer set. We did one, didn't really hear anything, about to send another one. I'm just worried we're going to get so crazy busy, swamped. I don't even know if we want to send out this many. And I said, listen, man, if there's one thing that I've learned in all of my years of all the different businesses that I've tried, never be concerned about swamping yourself with sales. Like at the end of the day, if you're swamped with sales, that's a good thing. And I would push yourself till you redline and you're about to explode. And then I would go read EntreLeadership by Dave Ramsey and Buy Back Your Time by Dan Martell and learn how to scale and build a team so you can buy back your time. Now, when I say buy back your time, I do not mean a 5-hour work week. And that's actually one of the things that Dan Martell talks about in his book. And I'm going on a little rabbit hole here, but really what I mean by that is how can you, when you're feeling absolutely maxed out, like, man, I am doing the work of 2, 3 people even, and I need to slow down. How can you offload some of the responsibilities that can be done by somebody else so you can really focus on what you need to do? So I'm already starting to build a queue of like, what is it? Like one of my goals was to hit the point in both profitability and busyness that I would be able to hire an executive assistant by the end of sometime by the end of my first year. So about the end of 2025, beginning of 2026. Now with that, I've already started putting down a list of what would that executive assistant do. And this goes back to that bottleneck. Like I'm bottlenecking my life where I get so busy that then I have to solve that bottleneck, right? And so the way I think about that is, okay, well, that executive assistant, according to Dan Martell's book, would take care of my calendar and my email. And beyond that, I also want them to take care of the social media management and then also just help with some of the administrative tasks around here at AmbitionX Real Estate. We have an awesome gal on the team, Miss Hillary Cooper. She absolutely crushes it at what she's doing right now, but I think a second set of hands just to help offload some of that responsibility from her so she's not working like crazy on all fronts would be super helpful as well. And so I'm already thinking about, okay, as I'm building, as I'm growing, what are those different places that I could bring somebody into my life to help. I don't enjoy posting on Facebook every single day, but I know it's something that needs to happen. So I need somebody to remind me. I might be able to create some sort of like initial prompt that they can build off of. I can get the photos. I can do whatever I need to do to kind of get the ball rolling. But there's so many things I do in a given day. And I think in a single day, like if I don't check my emails, like on average day, I'm probably getting 40 emails. Average day, I'm probably getting somewhere around 20 to 30 texts, plus calls, plus requests, plus people coming into my office and asking me questions, plus Slacks. And I'm probably, on Slacks, that's probably again like another 20. So it's like I'm constantly getting notifications and pinged all over the place. And there's so many questions that I answer in a given day that I go, man, I don't really have to be the one answering that question. Like that's a question that somebody else could answer. I only want to be answering the questions that I need to answer. I'm not ready to hire somebody yet. I got to keep pushing, got to keep building, got to keep growing. But I'm building that bottleneck up in my own life. Like I said, title of today's episode is Building Bottlenecks on Purpose. I'm purposely building those bottlenecks so that way I can back my way back out of it later. So transitioning away from the real estate things to the stock things, wow. All in, the market's pulled back 17.5% as of today. There was a lot of uncertainty around what's happening in the economy and inflation. Are there going to be rate cuts? And then all of a sudden, boom, President Trump comes out with these new tariffs, scares the world, even though they're not necessarily all that unreasonable. Everybody's just freaking out, wondering how is this going to affect the economy? Man, the VIX hit 44.5 today, and I was looking at it going, man, is this a place where I should short? I don't know. I was looking at like 100-day options though, and I was looking at the risk graphs, and honestly, I made a decision years ago. My dad and I we came up with this saying that it's better to quote unquote lose money than it is to actually lose money. And as I was looking at the risk graph and I was thinking about shorting the VIX, I just had this gut feeling that I needed to go back to that saying. I didn't have enough education. Do I think that the VIX is going to stay up at 45 forever? Absolutely not. But I also am aware enough of my own skill sets and abilities to recognize I'm not educated enough around that particular instrument of investing to make a really comprehensive investing decision. So I ended up making the decision that right now just wasn't the right time to short the VIX. Is it because I think it's going to stay up there forever? Absolutely not. But it's because I don't understand the instrument well enough in order to make that decision. Now, as you guys can tell right from this episode, that doesn't mean that I'm indecisive about anything in my life. I recognize my lanes, right? Like I'm out there building a brokerage because I recognize what I can do really well and what I have a support team for. I'm out there buying the S&P 500 on this dip. I just bought some more at the 17.5% pullback. Why? Because I believe in the bullishness of the economy. I believe that the major pullback of our economy is not going to happen until at least the end of this year, if not sometime into 2026. I really think it's in 2026 sometime. But at the end of the day, I have another buy set up for a 20% pullback. And then let's say that the economy goes all the way for a 50% pullback. What am I going to do? Well, at some point I might consider, like buying some puts as insurance, at least on the way down if things start getting really crazy. But to be quite honest with you, I'm kind of at this place where I'm like, if there's a major pullback in the US economy, what I'm going to watch for is the death cross. And the death cross is the 50 period moving average crossing like the 200 period moving average, which has not happened yet. If that happens, that's probably the time where I will buy some puts and I'll collect some money on the way down because I'm going to be bleeding and hemorrhaging money as we fall. But at the same time, that's money that I've already set aside for investing. Like that's not my savings. That's not my emergency fund. That's not money I need to pay rent. That's not money that's supposed to be sitting in my bank account. That's money that I specifically have dedicated to investing. And along the way, I'm still going to collect dividends. I'm still going to be able to sell covered calls. I'm going to have to be careful about it because I don't want to accidentally get called out on a covered call and take a loss. But I can use those covered calls to lower my cost basis. I can use the dividends to lower my cost basis over time. And I believe that, let's say that the economy loses 50% of its value today. I believe that in 5, 10 years from now, obviously it's going to be well above that. And so I just have to go, okay, you know what? That money's gone for 5 years. I'm just going to let it sit. I'm going to, create some mailbox money as far as like churning it over, but my money's stuck in the S&P 500 for the next half decade or decade. What do I care? Like, I don't think the US economy is about to crumble apart. It just might be a little bit overheated and overvalued right now, which I really do think it is. And maybe I bought closer to near the top. Is what it is. I don't want to also wait 2 years to actually invest my money because I'm waiting on the economy to fall apart. Because what if it doesn't? Right? I mean, I can guarantee you this with the direction of the stock market. It's either going to move up, down, or sideways. But as far as exactly which direction it's going to go, nobody knows. And anybody who says that they do is just a weatherman, right? So, the big thing for me right now is I'm actually looking for Bitcoin to finally give way with the market and give me a better price on BITO so I can scale in a little bit heavier into that and I can get those dividend payouts because that would be an amazing cash flow strategy. But I don't, with the market down so much right now and Bitcoin just hasn't quite cracked that floor, I'm not confident that Bitcoin's going to be able to hold. Worst case scenario, the market comes back, Bitcoin rips, and I just stick with the one lot of BITO that I own. I also actually sold a put, a $19 put that expires in April for $1.50. And to be honest with you, I hope that that fills because that gives me a cost basis of $17.50. So I think that would be something great. I would really love to be holding on to that particular contract. But outside of that, I'm really excited about what's happening in the market right now. I'm excited about my position. It's interesting as I say that. I could have also, the other day, that specific BITO got down to 17, it got down to like 17.80. And I know the dividend payout's probably going to be something like $60, which would be like another 60 cents. So that would have actually given me a cost basis closer to like 17.30, 17.20 if I had collected the dividend payout because it gets paid out the first Monday of April, which is actually it'll be just a couple days from, actually it'll be the day that this is coming out. So looking back, I actually think I might have made a mistake on that because I could have collected an extra 20 cents and I would be collecting dividends long term. And I would have had I would have had the same cost basis, but it would have displayed differently. I don't know. Now that I say that out loud, I think both ways could have worked. But that was the one I had set that order in advance. It's interesting because as I was doing some reflecting on all the orders that I've done recently, I was looking at my realized gains and lots, and I realized that all of the trades that I made in the moment when I was just trying to look for a trade, I lost money on those. But the trades that I made preemptively, where it was actually usually after hours at night, I was on my computer, I was picking levels and looking at different VPs and things like that, and I'd say, okay, I'd buy here, I'd buy here, I'd buy here, whatever. On those, I've made money consistently. And I realized, wow, I'm doing a lot better at my logical trading whenever the market's not open, not feeling like I have to make a decision right now, but I'm just saying, hey, if it comes down to these levels, this is where I'll buy, than I am whenever I'm, buying the levels in the moment because I'm making more of those emotional decisions. So I've got all my orders set. They're out there now. Do I wish at this point in time that I had actually bought a position of some of those bonds and not just an option on it? Yes, because I actually exited that option for profit just before the tariffs because I wasn't really sure what was going to happen with the economy. And I was like, well, I'll just take all my profits here, just hold my stocks and kind of see what happens next. So, kind of an interesting thing. I would be better off if I had held, the bonds, but if the markets had reacted positive, I think that the news was going to come out as positive. No. But if the markets had reacted positive to the news, then bonds would have fallen and I would have been worse off if I had been, holding those bonds. So, yeah, I mean, I guess, and also, they continue to push back when their projections are for doing rate cuts. I was just reading an article on it today from Fed Chair Jerome Powell, and so until the rates start to come back down, the value of those bonds aren't really going to start going up. At least, it doesn't really change the value of the underlying assets. They may go up because people get excited about them because people flee to them as a hedge for safety. But as far as the actual value of the underlying asset, they don't increase until interest rates come down and the market prices them incorrectly. So, from that perspective, it's like, well, I don't really know if bonds are right. Now's the right time to go heavy into bonds. But I do think over time, they're going to have to lower rates in order to not hemorrhage the economy. So we'll just see what happens. Last thing I'll say though today, it was really interesting. I saw a post the other day where somebody asked, "Hey, I've got $10,000. Should I invest it into the S&P 500 or should I buy Bitcoin or should I invest into something else?" And my first question when I saw that was, "Man, well, how did you get the $10,000?" And my actual comment back was, "I recommend that you either invest into or actually I said you should invest into education, either around investing or marketing and sales." Here's the deal, and I'm sure a lot of you guys understand this principle, but investing into marketing and sales, like that education to learn how to do that, that's what brings cash into the door. I make most of my money in what I've done as far as building businesses, bringing people on, all that kind of stuff. That's marketing and sales. That's all it is. So all the education that I've spent money on over the years to learn how to market, learn how to sell, that's what's making me that cash right now. But then the investment education gets that cash rolling over. So it really just depends. Like in my mind, it's like, okay, if you got the $10,000 from a business, then I'm thinking, okay, well, if your business is at max capacity, you don't think you can squeeze any more juice out of it, then investing may be the right way to go. But if you just got that money and you're not sure what to do with it, maybe you inherit it from a family member, well, I would say maybe invest into education around marketing and sales. And I tell you what, you don't have to buy an expensive course. Buy books. I can buy a book for 20 bucks. And now I still have $9,980 left to invest into that marketing or sales after I read that book and figure out what to do. And maybe I read that book and then I go get another book and another book. I've read so many books. My book collection is pretty decent at this point, right? So buy some books, educate yourself, surround yourself with the right people and learn. Learn how to bring cash in the door through marketing and sales. Learn how to get that cash rolling over through investments, but educate yourself before you just start throwing your money in the market. Because if somebody threw their money in the market, like 2 weeks ago, or a month ago, they would have thrown their money into the market at the very top of the S&P 500. Now it's dropped 17.5%. They're bleeding like crazy. They don't know what to do. Maybe now is the time where they're freaking out because they think the U.S. economy is going to just completely hemorrhage and die. So they're, pulling their money back out. And then the market starts to correct. You're gonna be like, oh crap, that was money that could have been made. Versus me, I'm buying at different levels all the way down. And I didn't start buying until we hit like a 10% pullback. So I bought it like 10% and 12.5% and 15% and 17.5%. I got another order out there at 20%. And if we start going below 20%, I'm gonna have to reevaluate my position and figure out where I'm at, what my next steps are, how far do I think this is gonna go down before it hits a bottom, and really start to figure out some of those questions. But I honestly think we're near the bottom here. But hey, what do I know? It's just my humble opinion. But I think that's a great stopping point for today. I think we covered a lot of great things, but as you guys can see, I'm building bottlenecks on purpose, right? I'm trying to make myself super busy. I'm trying to now, we went from this bottleneck of too many sales to now we have so many agents. And now I got to go out there and create a bottleneck again for them on bringing like too many leads in the door, creating too many opportunities to purchase, where then I have to get more agents because we're just continuing to build forward. If you want to build slow and comfortable, don't build bottlenecks, right? But if you want to build something absolutely amazing and you want to build quickly, all you have to do is focus on where can I build a huge bottleneck in my life where it's just tons and tons of value. And then I can tap into that value by offering an opportunity to somebody else. Look at the agents. I have all these sales that I'm now committed to doing. So the way that I relieve the pressure valve on that pain point is I can now offer the opportunity to all these real estate agents to take over these listings. Well, now I have all of these really great agents that are doing listings, and my pain point starts to become, how do I keep these agents fed? So now I can switch tracks and go, okay, let me go to the market and say, hey, I've got some amazing real estate agents who can get your house sold, who can help you find that perfect house. And if I can learn how to frame it and pitch that the right way, I'll have people from the market raise their hand, say, yes, I'm a buyer, I'm a seller, I want help, please call me, please help me. And then I can all of a sudden grab that person, connect it with the agent who's looking for opportunity, and then I can create another bottleneck over here, right? And then I can go back to the market for agents and say, hey, where are my all-star agents that need buyers leads right now? Because we have, let's just say we're bringing 50 properties in the door every day between Ambition Group and what we're doing here at the brokerage. That Ambition Group's got 50 that are coming onto the books every single month, right? Then if I'm able to convert that and every listing is turning into 40 buyers, 40 buyer leads, that's at least a 5% conversion rate. So you're talking like 2 to 3 transactions that are coming from those listings every single month. Well, now you're going, okay, well, I have 50 purchases that have to get listed and then another 2 to 3 transactions per each of those 50. That's like 200 transactions a month. Right? So now I can go back to this market of agents and say, hey, I have all of this deal flow. Where are my amazing agents that need deal flow? And it's just this back and forth game, right? And having a lot of fun doing that. And I'm kind of at a bottleneck almost on my capital where we're investing here on the dip, and now I'm starting to go, okay, I need some more cash. I need to get some of this land sold because I'm pretty much tapped out of cash. I own all these assets now. I need more cash to be able to buy more assets. And man, just it's fun. It's fun. It's tiring. All at the same time, I won't deny, but at the end of the day, it's fulfilling, it's rewarding, it's so exciting to come in, see the team succeed. Like, it just lights me back up and be like, okay, I want to do more. I'm having a lot of fun helping other people experience success, create success in their lives and their businesses, and just be able to continue doing that going forward. So that's a good spot though in today's episode. I just said that like maybe 5 minutes ago, but I'm gonna say it now. We're gonna close it out with our identity mantra. I'll say it first. You guys say it after with me. I explore the unknown. I conquer new frontiers. My journey is powerful, and my wake is a wealthy legacy. And just a reminder, guys, the way we define wealthy is the ability to cover your monthly expenses without having to lift a finger. Like, that's what I'm doing on Bido right now. I'm trying to get to the point where I have at least $300 a month in dividend income off of Bido. And then I have dividend payouts, and I've got my, cash flow from options. And I mean, it's just like, you could do the same thing if you were selling notes off of like tax sales. You could do the same thing if you had built up a whole portfolio of tax sales and you're just flipping those out and just like, anyways, build that cash flow. But wealth is truly being able to do that without lifting a finger. And then legacy, leaving a long lasting impact on others who come after you as they receive the fruit of your labor, whether that fruit be good or bad. So remember, guys, plant good seeds, cultivate good trees, and you too shall produce the good fruits. It's been awesome hanging out with you guys. Please like and subscribe to the channel, like the video. It helps the algorithm if you enjoyed it. Also, in the description, there's links to some cool Google Docs, the Wealth Health Checkup, and links to some other books and resources that I put together for you guys. With all that said, this has been another episode dedicated to you and your own personal wealthy legacy journey. Go out there this week and simply take the next right step. And I cannot wait to hear about all of your awesome success stories. Talk to you guys later. Bye.